here. I think that even though you've got all the analysts out this morning, I mean, the commentary must own once in a lifetime opportunity. This is coming from Melius Research. Yep. We got a bunch this morning. But at the same time, you got the blockage of TSM sales. So is it really at the point where maybe we do kind of need to plug zero into our China revenue models for these companies?
I don't know about zero, but
just to see how it looks, because I don't know, we're going to do 200% tariffs or
something. Right, yeah. I mean, stock's done pretty well, right? Up nearly 200%. They got earnings next week, so that's going to be a catalyst.
The market hasn't really cared about the geopolitical stuff for chips, as long as the themes of AI are still intact.
Yeah, chips or anything else. Geopolitical risks are getting pushed to the side across the board on everything.
I mean, I guess the point is, like, if we believe the people of these companies like Jensen that say infinite demand or insane demand or whatever, or some of these analysts, then I guess it doesn't matter if China doesn't buy some because there's infinite from somewhere else.
Right. They're sold out of their Blackwell chips, right, through next year. So do they even need China at this point? Well, I do have to put zero in there, but I just look.
As two prominent Wall Street analysts released new price target revisions ahead of the AI chip maker's third quarter earnings report next week, Nvidia shares slightly declined in early Monday trading, but are still on track to gain more than $350 billion in value this month. With its incredible 2024 gain exceeding 205%, Nvidia, which this recently surpassed Apple as the most valuable company in the world by market capitalization, also displaced faltering chipmaker Intel in the Dow Jones Industrial Average. Analysts anticipate a huge 82% year-over-year sales spike to just around $33 billion when the company reports on Wednesday, November 20. This is partly due to the continued demand for its legacy Hopper chips and profits from its recently launched Blackwell processor line. In late August, Nvidia informed investors that its Q3 sales would be around $32.5 billion, more than twice as much as it had made in the same period the previous year. However, due to supply chain snags and design modifications, the business had some delays in releasing its new line of Blackwell processors. Given its dominance of the market for so-called AI accelerators, which power the massive datasets and language models utilized by businesses like Microsoft, Amazon, Meta Platforms, and Google parent Alphabet, Nvidia is probably going to advise investors to expect revenue increases in the upcoming year as well. The four largest hyperscalers, who all released their third quarter earnings this week, are the backbone of the global battle for AI investments, according to UBS analysts, who predict that they will spend $267 billion on capital projects related to the new technologies in the upcoming year, a 33.5% rise over this year's estimate. Even Tesla anticipates spending over $11 billion this year, mostly due to investments in AI computation, as it pursues CEO Elon Musk's audacious goals of autonomous robotaxis and other self-driving electric vehicles. We predict that by 2025, the entire addressable market for AI accelerators will have grown by about $70 billion. Harsh Kumar, an analyst at Piper Sandler, stated in a note released on Monday that Nvidia is well-positioned to take the majority of this growth and give merchant chip rivals only a modest share. Supply restrictions will probably result in only minor revenue beats during the October quarter, and the 3 months ending in January, according to Kumar, who raised his price objective for Nvidia by $35 to $175 per share. However, he anticipates additional AI-powered growth into 2025. According to Kumar, we expect management to emphasize the incredibly high demand for the H200 and the Blackwell and Grace Blackwell architectures. In order to satisfy the spike in demand, Nvidia CEO Jensen Huang actually ordered South Korean company SK Hynix to expedite supplies of its high-bandwidth memory chips last week. These chips enable AI systems operate more effectively and consume less power. Joseph Moore, an analyst at Morgan Stanley, believes that Nvidia is unable to make further significant upward revisions to its revenue projections due to supply restrictions. However, he still predicts several billion in sales for Blackwell in the January quarter, along with modest increase for the Hopper line. We are back to fully supply constrained on new products, which could limit upside on current quarter and outlook. Moore wrote in a note released on Monday, raising his price objective for Nvidia by $10 to $160 per share. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
Even great big companies with huge market caps where this is a much smaller percentage, but even Microsoft, Amazon, Tesla, Google, all benefiting now.
I think that to really benefit in AI, you have to have a big, kind of data moat. You have to have the applications, you got to have the customers, the capital to train your models and deploy them. And so when you take a step back and think about the Magnificent Seven that you have on there, they all kind of check the box. And so to me, they do have an AI advantage. And so you could see them well positioned for the long term.
The performance of the top 100 non-financial companies listed on the NASDAQ Stock Exchange is monitored by the NASDAQ 100. Every year in December, the complete index is reconstructed and component weighting is modified every 3 months in March, June, and September. The technology sector, where the emergence of artificial intelligence, AI, has had a particularly significant impact, is where the NASDAQ 100 is highly weighted. Since ChatGPT's launch in late 2022, Nvidia has in fact led the index upward, with 2-year gains as of this writing of 900 and 10% respectively. Wall Street is still optimistic about Nvidia stock. CNN Business provided the numbers below. 92% of the 65 analysts who track Nvidia believe the stock is a buy. At its current share price of $147, the median price objective of $150 per share represents a 2% increase. When it comes to speeding up data center processes like running artificial intelligence, AI, apps, and training machine learning models, NVIDIA graphics processing units, GPUs, are the industry standard. Technical computations may be completed faster and more effectively by GPUs than by CPUs, and NVIDIA systems routinely break performance records at the NL-perfs, which are objective benchmarks that assess AI training and inference skills. According to David Harold of John Petty Research, NVIDIA's vertical integration across hardware and software domains is a crucial component of its success. To put it another way, NVIDIA's proprietary TUDA software, which powers CPUs, networking hardware, and interconnects, complements its GPUs and speeds up application development for a variety of use cases, from robots to recommender systems. To put it another way, the business offers a complete AI solution. In the second quarter of fiscal 2025, which concluded in July 2024, NVIDIA announced impressive financial results. Due to the high demand for AI software and hardware, revenue increased 122% to $30 billion. Additionally, non-GAAP earnings increased by 152% to $0 and 68 cents per share of diluted stock. According to Grand View Research, investment on AI accelerators is expected to increase at a rate of 29% per year through 2030, placing the company in a strong position to sustain that momentum in upcoming quarters. Over the next 3 years, Wall Street anticipates that NVIDIA's earnings will rise by 35% a year. Because of this, the present price of 69 times earnings appears reasonable but not inexpensive. Crucially, because NVIDIA releases its third quarter financial data on November 20, the company's stock may be highly volatile in the upcoming weeks. Those that are at ease with volatility might want to purchase some shares now. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Let's talk about the sentiment right now within the market. It almost seems like nothing is going to stop this move to the upside that we have been seeing more broadly. What's your take just on where things stand today?
Well, I think you're right. Nothing's going to stop this move to the upside. It's a little bit of a surprise, right? Going into this, the Trump trade was seen as short equities and bear steepener. what we got was bear steepener plus long equities. And if you were short equities in any way going into this, you were really disappointed, and you're probably going to be. And as we go to the fundamentals you're just talking about, things are probably just going to get a little cheerier for companies over the balance of the year. So it seems like being long mega cap stocks stayed to be a good idea. Being long stocks in general is a good idea. It's probably a good play through the end.
I'm curious about Nvidia, the most adored stock in the world, in light of Donald Trump's return to the White House. Darling, will a Trump administration benefit or hurt the AI market? Has he ever criticized Jensen Huang, the CEO, about X? Does Jensen have any particular opinions about Trump that would put the company's stock price at risk of making headlines? All of this is significant because, as I have stated, Nvidia has already taken over the market, even before it was included in the Dow Jones Industrial Average, a former smokestack index. It's unclear what Huang's friendship with Elon Musk, the CEO of Tesla and a Trump supporter, will entail for Nvidia's financial future over the next 4 years. Talk to investors, and the initial feeling is that Nvidia should succeed because the forces propelling its operations are just too strong to be suppressed. According to Eric Jackson, the founder of EMJ Capital, it's difficult to draw a straight line between Nvidia and Trump. AI seems to be permeating every aspect of technology in some intriguing ways, in my opinion. But generally speaking, it's clear that Trump supports cheap taxes and prosperity, which will engulf all technology, including artificial intelligence. Jackson believes that since Trump may further open up the markets for digital assets, Nvidia may see increased demand from the Bitcoin mining sector. According to Jackson, Nvidia might also benefit from less stringent rules governing the energy sector, which would allow hyperscalers to proceed with AI infrastructure rollouts more swiftly. Jackson stated that one risk to keep an eye on is the possibility of a trade war with China brought on by tariffs. Nvidia has significant product development talent in China in addition to selling chips there. It's also important to consider how this trade war would affect China's ties with Taiwan, a major semiconductor manufacturer. However, analysts predict that Nvidia will mostly remain Nvidia. After Blackwell, the company's next 3 chips, Blackwell Ultra, Rubin, and Rubin Ultra, might be very successful, according to Bank of America analyst Vivek Arya. According to Arya's analysis, those products will start to be available on the market in Q3 2025. According to research, analysts predict that Nvidia's earnings growth would reach 43% in 2025, at $4.08 per share. Based on all the conversations I've been having, it seems conservative to me. I could easily argue that Nvidia's earnings next year will be $5 per share. If we assume a P/E multiple of 40 times instead of the present relatively low 37 times, Nvidia's stock would be worth $200 instead of $148. According to Jackson, the stock is worth at least $250. As always, sharing your thoughts and insights in the comments section can foster a more informed community discussion, helping everyone navigate the complexities of investing in this dynamic sector. Stay ahead of the game with the latest stock market news, data, and important updates. I share valuable insights and real-time information on my Telegram channel, ensuring you're always informed before everyone else. If you want to keep up with the fast-paced world of investing, open the description below, click the link to my Telegram channel, and join our growing community. Don't miss out on Crucial Up.